Maybe you should have asked for the lightning talk.
All right.
As well.
Okay. This on? Yeah. All right. I think we're going to get started. So thank you all for joining us in this this panel right here. I'll reintroduce myself in case there are new people. My name is Eric Voorhees. I'm involved in a number of Bitcoin projects from BitInstant to Coinapult to Satoshi Dice. And I'm here with these fine gentlemen today to discuss general economics of how this whole crazy system works. So we'll start down here with Garrick Heilman. He's with the Department of Economic History with the London School of Economics and Political Science. He's been studying alternative currencies in general, not just altcoins, but actual alternative currencies that are being used all over the world. So when he learned about Silk Road and Bitcoin 2 years ago, naturally he got interested in it. He's done thesis research on parallel currency markets and appeared a number of times on Sky News and Al Jazeera to discuss Bitcoin with the various journalists of the world. Up next we have Tour. He writes a Dutch language financial newsletter which goes out to investors in Belgium and Netherlands. A lot of you may have seen him from his appearance on RT, Russia Today, with Max Kaiser several months ago. And he's also spent a lot of time in Argentina helping to develop the Bitcoin community down there. Next up we have Peter Surda. He's a Bitcoin economist based in Vienna. He is originally an IT guy. Used to work in payment processing, so obviously natural fit. His master's thesis, he wrote a master's thesis on Bitcoin from an Austrian economics perspective. And currently he's involved in full-time Bitcoin economic research. He has a blog, economicsofbitcoin.com. And next up we have Yoni Asya. He's the CEO of eToro, which is a badass company based in Israel. They are the leading social investment network. Basically a global investment house where people have sort of a social profile and you can follow other people's stock choices and make trades alongside those that you follow. He describes it as a Facebook meets E-Trade. And he also leads the bitcoinx.org colored coin project, which we'll discuss in a little bit. And so that's the team. So first, I think I want to discuss something that is very important to understanding Bitcoin, which is the difference between Bitcoin and other currencies. Why is Bitcoin different? What makes it interesting and unique? So Garrick, I think we'll start with you. Do you want to discuss what makes Bitcoin unique and what properties interest you about it?
Thank you, Eric. Well, first off, as Eric mentioned, I'm studying alternative currencies in general, so I'm probably the least qualified Bitcoin expert here on the panel. But I mean, the three classic definitions of money are, of course, it's a store of value, unit of account, and medium of exchange. But as I emphasized in my presentation, the preceding session, it's that medium of exchange component, I think, that's really the key to getting traction as a currency. And certainly Bitcoin's a medium of exchange. So what makes it special? It's resilient. It's survived 2 bubble crashes. It's come back from the dead, so to speak. It's obviously got a great protocol, software protocol. There's, I think, been real innovation, on the technical side of Bitcoin. If you saw Gavin's presentation this morning, that's the first time I've seen him present. There's clearly a really, really great team of people at the core of Bitcoin, and I think that's hugely important to why it's getting traction and why it's, going to be around for a while.
Yeah, Tur, what do you think? What's the difference in Bitcoin?
There's of course many things, but a couple spring to mind. One, that it can be incredibly discreet. It's actually cash, and then again, it also has this superhero quality you were talking about. The fact that it can fly all over the world, which is tremendously appealing to people that live in countries where there's capital controls and all kinds of restrictions. Another unique characteristic is the fact that it can't be counterfeited, specifically by governments, because if you look at fiat currencies, counterfeit is, the biggest problem is not so much the few bills that are circulating because of some guy with some printing press in his basement. It's a centralized debasement of currency. And so owning Bitcoins, using Bitcoins really allows people to become free of this theft. And that's what I think is unique about Bitcoin.
Peter, you want to comment on this topic?
Yeah, I have a couple of additional points. The three interesting things about Bitcoin that didn't exist before really in this extent, I would say the first one is that the production and transaction processing are a fully transparent and auditable process. Anyone can look at it, anyone can verify how it works. The second one is an inelastic money supply, and not only inelastic, but pretty predictable in advance. And the third one is low transaction costs at a level which didn't exist before at all. And it has been hypothesized that something like this might exist, but Bitcoin is the first actually working system that shows that, yeah, it can be done.
Yoni, you have anything to add?
Yeah, I just want to say that, you used the metaphor of the horse and the car. And I think asking how it differs as a currency is sort of like looking at a car and asking how does this horse, what's the speed of this horse? This is just new technology, more similar in my opinion to HTTP, IRC, or TCP. And the actual value is just an example of its use. And I think a lot of people here look at it as a currency, but it's actually a new technological platform that will see, I believe, a lot of different uses to it in the next couple of years.
I think that's a good place actually to talk about one of the uses that I wanted to focus a little bit on today, which is this concept of colored coins. And I think it's a very fascinating economic feature of Bitcoin. And so I wanted Yoni to discuss it a little bit.
So colored coins, maybe can you put on the screen?
Actually, how many people here have even heard that term, colored coins?
Whoa, awesome.
All right, how many of you feel like you really understand it? Because I'm sort of like this.
Awesome. So I'll explain the concept of colored coins, and then I'll do a quick demo. So the idea of colored coin is actually to use the blockchain, either the Bitcoin blockchain or alt currencies blockchain, and actually use it as a general ledger or as a digital asset grid for other assets rather than only Bitcoin. So in theory, you could have people issuing gold coins on top of the Bitcoin protocol, which means you take a couple of Bitcoin and you say these Bitcoins are now worth gold, and whoever brings me these Bitcoins back, I'll pay him in gold, and then I can start selling these Bitcoins in the worth of gold for anybody who believes I'll actually give them the worth of gold if they bring them back to me. And that's because Bitcoin, in essence, is a decentralized store of value. So it doesn't need to specifically only store the value of Bitcoin. It can actually store any numeric value of any asset. So the cool thing is that if people start issuing stuff like gold, euro, dollars, or even Facebook stock on top of the Bitcoin network, what people will be able to do is actually peer-to-peer. I'll be able to buy with gold Facebook stock here from Eric, which today, if I wanted to do, would require probably like 8 different financial intermediaries. So there's a group of programmers working on it. There's Tamas from Bits of Proof who's also featuring this. This is a very small example based on Bitcoin.js. So as you can see, it's a wallet. So you can see the amount of BTC in the wallet. I'll stand up for a second because I can't see. And as you can see, this wallet doesn't have only Bitcoins. It has a list of different amount of actually currencies. So you can choose new coin, and then you have 990 new coins as well in the same wallet. So suddenly every wallet can have multicolors, so basically multiple assets or multiple different coins. And you can actually either issue new coins or just send coins. Just send coins to another, so this is another one opened, and you can just send new coins exactly the same way you would send Bitcoins between wallets. Can you send like 10, 20. So it's basically, everything works exactly on the blockchain. It's just client code, so The blockchain wasn't modified at all to do this. It just places trackers, so it can track a specific transaction and say from now on this transaction is new coins rather than just Bitcoins. And you can actually, so this is the gods of demo working, so it probably won't work. But he already transacted the previous 10 Bitcoins, so you can move to the Chrome and actually see he actually transferred the additional 100 new coins here. So that's in general the concept. There's, as I said, a couple of groups working on it, mostly through a Google group called bitcoinx.org and the website bitcoinx.org. And what we see is, in our vision, is basically people moving a lot of different assets into the digital economy.
So let me jump in here, and this is actually very similar to, if you're familiar with the Ripple system, what that system purports to do, which is to send other assets around. So colored coins is actually something built on top of Bitcoin, which does a very similar thing. Essentially, if you trust certain entities, in Ripple's case it would be the gateways, in this case it would be any company, you can actually build a whole world of interesting economic transactions on top of it.
Yeah.
Yeah. Okay, so let's move on.
Can I just say something?
Yeah.
I think this is really exciting, and it really shows how Bitcoin can become much more than just a currency. It has inherent possibilities to develop an entire financial system whereby people can just move from one asset class to the other without having to move back to the old system, so to speak. So it opens the possibility for a real monetary paradigm shift, which I think is really exciting.
All right, I have a question for you, Garrick. So Bitcoin is obviously a money that has been separated from a central state. And as you have studied alternate currencies, have you ever seen other monies around the world in history or today that are not necessarily digital, but which are specifically not connected with a state?
So has there been another currency that's not been connected with the state?
I mean, and was it successful in any way, or why or why not?
Yeah, I mean, there's been a lot of alternative currencies throughout history. I mean, just to cite one quick example, in the 17th and 18th century, more 18th and 19th, in the UK, there was this problem of small change, not enough small change to conduct small transactions. So merchants started issuing tokens. These were used. This had nothing to do with the state until the state figured out how to print enough small change to really drive the need for these merchant tokens out of existence. So there's been lots of examples of currencies. You've got the Brixton pound right next door to where I live in London today. It's, actually you can use it to pay some local taxes in the Lambeth Council in London. As I talked about in my presentation just an hour ago, Bitcoin should be trying to get that kind of traction. The ability to say pay parking tickets with Bitcoin. I mean, how cool would that be in terms of getting this on people's radar screen as a mainstream, really legitimate currency for things other than, what I always get asked about when I'm on TV. Can you only buy drugs or hire someone to kill someone with Bitcoin? Is that all you can do with it? That's not a good story to tell in terms of promoting Bitcoin. You need to change the narrative in the public's eye.
Yeah. Peter, tell us, you wrote a thesis on Bitcoin, and tell us, you must have observed a lot of the metrics of how Bitcoins move around and whether the system is accelerating or slowing down or being used in various ways. So what sort of observations have you made of the Bitcoin economy?
Yeah, I would say that the main thing that I concluded was that everything is irregular. You shouldn't be expecting any sort of stability or regularity anytime soon, possibly never. Yeah, it might happen when Bitcoin really gains enough traction and comes up to the level where it can replace existing currencies. Then we might see some sort of stabilization. But until then, the velocity is going to go up and down, volatility is going to go up and down the price. So don't expect it to stabilize, but this is not necessarily something negative. So my suggestion would be to make use of it and get used to it for the foreseeable future.
Yeah, Tur, we were talking a little bit about at lunch about this volatility issue. What are your thoughts on the volatility of Bitcoin?
Yeah, I think one way to look at it is to look at Bitcoin as this new commodity that has been invented and that's been introduced into the market. And what we've seen historically, there's only been very few examples of really new commodities coming into the market. And the one that really shines out, as far as I can see, is petroleum. This was a very new, a very, very useful commodity, was discovered in the 1850s. And there's a lot of data about prices of petroleum. And when you look back, you see that those first years, price of petroleum was extremely, extremely volatile. The price went from...
How many years?
Sorry?
How many years?
Oh, yeah, that's interesting. I believe it was actually more than a decade, probably 2 or 3 decades. And then also, but then again, I mean, back then the communication between all the nodes in the network, so to speak, was a lot different. Prices would vary also from different places within the United States. You had different oil prices. So that reminds us of how different Bitcoin exchanges today offer sometimes different prices at the same time. So I don't think it's something to worry about. I think the market is adjusting to this new commodity and is integrating it.
Yeah, and how silly would someone have looked if they said back then, you know, look at this crazy commodity called oil and how wild the price fluctuations are. This thing is never going to catch on.
Right, this petroleum bubble or something.
Right. So, you know, sometimes volatility is I think, a sign that something is useful and valuable, and society is trying to gauge exactly how valuable it is.
I want to add that the main use of Bitcoin today is a payment method. So the more people use it as a payment method, almost by definition, its value will increase. So anybody here that holds Bitcoin, the best way to make sure volatility goes down while price goes up is to increase liquidity, which means just buy as much stuff as you can with Bitcoin and buy Bitcoin. And the more Bitcoin circulates, then prices will go up while volatility will go down.
Can I maybe add something? In the analysis that I did showed that the price volatility last year between approximately February and May was very low, and that coincided with very high liquidity. I don't think we reached that level of liquidity now, and I think that this was because of there used to be a company called Bitcoinica, and it did something like liquidity arbitrage. And even though the price was around $5, so it wasn't high, but it increased the liquidity, and probably as a consequence of that, the price was pretty stable. So there is no strict necessity that like people use it as a transaction medium. It can also be a specialized service that maybe as a byproduct like Bitcoinica pays dividends on the deposits, and as a side effect it stabilizes the price.
Yeah. Garrick, what are the biggest economic obstacles to Bitcoin's taking over the world?
I mean, I think it's amazing how reluctant people are to change their behaviors. You know, I can't get my wife, I've been railing against too big to fail banks for years, and she still won't drop her Wells Fargo account and switch to a non-too
Maybe
big to
they'll
fail.
drop her when she needs them the most.
Maybe, yeah. People are very reluctant to make changes, and they're especially reluctant to make switches with regards to money and finance. You know, path dependency is the term that you hear, or just, you know, inertia. You know, convenience. This has got to be made to be convenient. I think if you could find a story or, you know, a killer way of using Bitcoins that's unique and is really compelling. You know, I talk about, you know, the mythical, you know, Jagdish in London earning money, sending it back to his grandmother in Mumbai, and avoiding the outrageous, you know, Western Union fees. You know, that's what you want the television reporters asking you about, you know, in terms of getting people to think about how Bitcoin can be a game changer, not, you know, as an alternative way to buy drugs. So changing the narrative, getting guys like Gavin out in front of the cameras so they see that this is someone who's not trying to overthrow the government. You know, it's about a new technology. It's cool. It's like the internet. We don't quite understand where it's going. Getting the narrative correct, and then finding ways in which you can attack the financial system where it is most vulnerable, and that's where it's really expensive. It's extremely expensive to pay for things, so you can come at the financial system not just from the consumer side, but also with merchants, with businesses who want to get rid of this 3% credit card fee. You know, two-pronged attack, pincer movement, as they say. So.
I actually think it's a lot about, you know, a lot about technology adoption, especially in the internet. It's all about killer apps and user experience. So the more we see, there's a lot of buzz, but buzz doesn't create the ecosystem. So if you look at Facebook or Google or you know, great apps that caught on the internet, it's apps that have millions of users. There aren't a lot of those today, but the more either existing apps adopt Bitcoin with millions of users and then suddenly they use it, or there would be here in the crowd, you know, founders that start something really cool that suddenly has 10 million users because it's that usable and the user experience is great. That's adoption of technology. And there's no way to sort of structure it or try to say the right things. It's about building the right things. It's about building now the roads and building the ecosystem.
Have any of you guys tried this, the gift app for Android, where you can basically buy a gift card with your Bitcoins and spend it in like a gazillion stores around the US? Raise your hand if you've actually tried that yet.
Tell us the name.
Nobody is, it's called Gift, G-Y-F-T. Nobody has tried this? Yeah, it's absolutely amazing.
That's the founder of Gift. No.
He paid me a Bitcoin to start talking about it. I think apps like that are really going to drive adoption because people, any of you now can go into Target and buy anything you want in Target with Bitcoin right today if you have a phone. You just download this app, you buy a gift card for Target in the app with your Bitcoins, and then you can check out with the card. Yeah. Yeah, it's amazing. Try it out. You'll be blown away.
I'll do that right now.
Yeah, do it right now. So, yeah.
You wanted the obstacles? There are two things that spring to mind, and both of them are myths. I think the first myth is that somehow storing liquidity in fiat money today in a bank is stable and secure. That'd be the first one. That would prevent Bitcoin from flourishing. The second one, I think, is the myth that it's somehow spending that stimulates economic growth and development. I feel there's a lot of resistance against the idea of saving in Bitcoin, whereas if we think about it, what's needed to start a company is we need to aggregate some capital, aggregate some people, and then we need an incubation period, and then they can launch products. So saving is good, actually, and we've seen over the last decades with historically low interest rates, all the time, again and again, the virtue of saving is being discouraged, and what we see with Bitcoin is an enormous boom because it encourages people to save, and I think I don't think it's needed to give in to the temptation to spend all our Bitcoins and not store them, because I think they will be worth a lot of money in the future, and we'll be able to build more businesses. And if I put fiat money into Bitcoin today, I raise the value of all the Bitcoins, meaning that entrepreneurs that want to start a new business have more purchasing power to do so.
Yeah, I think that's a fantastic point. This idea that the deflation of, it's not even deflation, but they call it deflation of Bitcoin is going to kill the whole experiment is absurd. All these people who are saving Bitcoin, a lot of them are now kind of rich, and a lot of these people are using this newfound wealth that they earned by saving it to invest in new Bitcoin companies. And all these companies that are trying to grow and just need $10,000 or $20,000 to get started, there's thousands of these people now that have that because they didn't spend it on a pair of alpaca socks. They actually saved it. The value grew because the system's growing, and they invest in that and keeps the system growing. So, yeah.
I think it's an awesome cycle because right now, if you look at the market cap, you say, even us will be adding support for Bitcoin very soon because there's suddenly, $1.2 billion out there owned by early adapters of technology that are looking for something to do with that money. So that's an awesome target market for any business. And now you'll see more and more businesses offering Bitcoin support. We'll see another wave going up. And then suddenly it'll be 10 billion, and then you'll have more businesses actually adding support, because it's an audience that has a lot of money that earned it sort of from nowhere. So they're nouveau riche, right? So they're spenders, and they're early adapters of technology and new stuff over the internet.
Peter, what myths about Bitcoin do you think exist out in the world that you would like to put to rest?
One of since the deflation aspect was mentioned, one of the interesting things about this is that the macroeconomic aspects they have, it's an entirely different question than adoption by market participants. So even if someone thinks that there are macroeconomic problems with Bitcoin, purely logically, that it doesn't follow that it won't get market acceptance and won't be used by people. So I think many pundits they miss this problem. They think it's the same thing. But on the other hand, I don't think this, even if it's a myth, I don't think this is something that it has a significant influence on the adoptions. Rather, what I would say is that the average Joe doesn't see the benefit for him. And what I think we need is that we need entrepreneurs that try out different niches and try to approach different market segments and find how they can benefit from Bitcoin. And the theoretical potential of Bitcoin is so amazing, as has been said before. It's not only money or a transaction system or savings. It has the potential to change a wide spectrum of financial and banking services. And this is something very far in the future probably, but businesses can be built on those hypotheticals and they can gain traction, and then it will be unstoppable.
Reminds me of a quote someone smart once told me in financial services, also related to eToro. He said, in financial services at this day and age, all you need to really build is an awesome product, and then just wait for the existing financial ecosystem to collapse, because it's just a matter of time.
I agree.
All right, how do people know when we're in a price bubble? How does that measure? Because it's easy to see it in hindsight. How does one discover it beforehand?
Looks like this.
when all asset prices are going up together at the same time.
But so let's say this recent run up in the Bitcoin price, which took it from around like 12 at Christmas up to $260. Is there any way that a person should even try to predict when that bubble will pop, or where it is? And what were you thinking when you saw this happening?
I'm still trying to find out if there's a way to short Bitcoin. According to Tyler Cowen, the Marginal Revolution blog, he linked to something. I guess there is some way to do that. If someone knows how, please let me know, because my favorite I haven't put this to practice, but my favorite investment idea on Bitcoin, and again, I'm pro-Bitcoin, and I think it's got a great potential, but I think virtual currencies in general have a great potential. And I'm not clever enough to say that I can predict the winner or who's going to, be the final, top virtual currency. So why not take advantage of, say, the relatively high price in Bitcoin, short Bitcoin, and go long a basket of other virtual currencies? So you do a long-short kind of hedging strategy, basically, to play the market.
So what price would you have shorted it at?
260, of course.
Good answer.
But by the way, shorting it is really easy. All you need to do is find somebody who wants to buy Bitcoin. So I'm actually...
Well, there's actually markets for shorting Bitcoin already.
Okay.
I think you can short them at MPEX and maybe Bitfinex also. Bitfinex you can short, so it can be done. can be done.
There's one suggestion I have in general. I think looking at the big picture of Bitcoin, what we see is it's a radically new technology that has mass appeal. What we usually see is a parabolically rising adoption curve, and that's what we see. If you look at, for example, the users of my wallet, that's just one proxy to see, oh, this is rising parabolically. So over time, what we see over the past 4 years is actually a parabolically rising price. So I think it's a pretty good idea to just buy and hold. My friends in Argentina, they were buying just before Bitcoin reached $1. They ran it all the way up to $30. It crashed to $2, and now it's at 120. They haven't sold anything. And by the way, if I ask them why didn't you sell, they're like, what should we have sold it for? The Argentine peso, maybe. I think it's interesting to look beyond the short term as well.
Let's talk about things like the Canadian Mint chip and Amazon coins. Do you guys have thoughts on these things? I'm sure you do.
They don't get it.
Why is that, Peter?
It doesn't have. It still keeps some of the old stuff while trying to replace parts of the old stuff with the new stuff, and there might be some advantages of that, but it's not really the big paradigm shift that can happen with something like Bitcoin.
I, by the way, assume Jeff Bezos gets it. So I think both governments and big corporations will eventually get into digital currencies, whether it's Bitcoins, altcoins, or new coins. And when you look at Amazon, for example, they're actually printing money. So one of the coolest things in Bitcoin that I think happened, and people don't realize it, it's a group of people that decided, yeah, Uncle Sam is printing money, why not print money ourselves too? And I think we see more and more companies actually printing money. So suddenly Amazon is giving $5 away of something that has a discount value on each new Kindle. That's Amazon printing money. And I think we'll see a lot of companies that are able to print money and have you have a store of value. Like, by the way, very shortly probably, well, Google Wallet are already doing it. Apple are looking into having you actually have some balance on the iTunes store. So the big companies will want you to have balance there, and then why not balance in a currency that they can print, right? It works well for governments.
Right. Yeah, I think it's really important for people to see that when these companies create these virtual digital currencies, because they'll get a bunch of news and everything, people don't realize that perhaps the main reason that they do this is so that they can float the value of that money. So when you buy Amazon coins, they're not going to let you buy $1.50 of the Amazon coins. They're going to make you buy $10 worth, or they're going to make you buy $50 worth, and you're going to buy a book for $7. And what's the remainder of that money going to do? It's going to sit in the bank account of Amazon, earning interest for them. And this is an incredibly powerful incentive for these companies to create these kind of things. So hopefully people understand, how gimmicky they are, and Amazon has every right to do it. And congrats to them if they can make some profit from that. But it's not a real currency, and so I get a little flustered when people say that.
Just to add one quick point to that, I mean, that was PayPal's entire business model. Peter Thiel, the whole profit motive or way they were going to make money was on the float, interest float.
And that's why their fees are so low. Mm-hmm. So, Tur, tell us, if Bitcoin takes off and it gets bigger and bigger, how is it going to affect sort of the macro economy of countries that it's in? In what ways is the government's control of the money in their economy, is it going to be altered?
Yeah, that's, I guess, interesting to think about. I think there will be some challenges for taxation when people start paying each other, and just the usual challenges that governments already face when they look at the shadow economy, where this is, by the way, it's estimated to be a $15 trillion economy. It's bigger than China, bigger than the US, any economy. This is the black market economy. Until now, it's been restricted to person-to-person transactions usually because cash is paper, but with Bitcoin being digital and it also being cash, then this market can expand vastly, and black market doesn't have to mean that it's evil or that it's somehow corrupted. It just means informal transactions, peer-to-peer transactions. And so I think it will be very challenging for governments when people start both earning and spending bitcoins to get in the middle of that and try to somehow tax what is going on. And I think that it will be the entrepreneurs that have direct, sort of like the entrepreneurs that are limited to a geographical location, like they have a shop or they have something that's visible and approachable. I think those will be the ones bearing most of the tax brunt in the future, and things like capital gains tax will maybe a lot harder to enforce.
Garrick, if you were Ben Bernanke, what would your opinion of Bitcoin be?
It's, I don't know what he would think of it. Ben gets a lot of criticism. I think some of that's fair. I'm a little more sympathetic to the Bernanke. These guys blew it pre-crisis. They arguably did a pretty good job post-crisis, all things considered. Right now he probably isn't really thinking much about it. The ECB wrote a long report on virtual currencies. They're thinking about it. I know a guy who's in my PhD program who's going to the ECB, European Central Bank, to work there. He's very negative, very dogmatic against Bitcoin. And so, I think as Bitcoin grows, if it grows, it will probably be perceived as a threat by the central banks. But the first test is to get past what I think Tour's talking about, which is this ability to use Bitcoin, to circumvent, taxation and money laundering and all these things. So you're going to have to clear FinCEN first before I think you get on the central bank's radar screen. That's the first hurdle, and a big one, because tax authorities like the IRS like to collect their taxes.
I think I think, by the way, governments won't give up taxation so easy. Yeah. So I don't think that's going to happen. Yeah. I think we might see a mandate saying that people have to report on their Bitcoin spending or virtual currency spending, just like it's real money, because it is real money. And
on the spending? Because people have to report on income, but no, are you saying actually on the spending of Bitcoins?
On buying Bitcoins and selling Bitcoins, like on actually getting assets onto the digital realm and off the digital realm. And I think we'll see more and more parts of the Bitcoin economy actually becoming social connected as well, or more transparent. So we'll see like Facebook connect Bitcoin wallets and Google Plus connect Bitcoin wallets, which are then something amazing for governments, because in theory, unlike cash, if you had for all of the Bitcoins out there a social connectivity, then you'd have the widest economy in the world, because you actually had a database with every coin and every penny connected to a face and the entire history of how money flew, money transacted. And I think that's probably at least that's the authorities and regulations next stage, is increasing transparency and connectivity to people, and it gets rid of the black market, the anti-money laundering issues, and actually create something very, very nice, which is connecting people's identities with their wallets.
I'll try to formulate my approach in a bit more abstract manner. I see the main challenge as a conflict of two different vectors of control. Let me explain that. On one hand, the states want to control the money supply and to be able to influence the creation of it. On the other hand, they want to control what people do with their money. And what Bitcoin kind of exposes is that it makes it difficult to achieve both of those goals simultaneously. Which means that if the state wants to prevent people using, let's say, the dollars in a way they want, whatever that might be, then people will naturally try to use something else for those purposes. And that means that the state will lose a certain level of control over the money supply. So in my opinion, the big challenge is that unless the state realizes that those two goals are in a conflict, and there's a problem here too, because it's different branches of the state that are in charge of these things. So they need to figure out how to coordinate their goals, because there is a risk that if they fail to do this, if they fail to give preference to one of those goals, that they will fail in both tasks.
I think we're progressing towards less control in general. If we look at an innovation and stuff, even Seth Godin is writing, it's less. Management is becoming less and less about control. Corporate structures become less and less about control, and I think eventually governments will be less and less about control and more about building an ecosystem and letting people thrive safely. It's hard. It's a paradigm shift, no doubt about it. But I think we're seeing it now with the best companies in the world, like eToro, Facebook, Google. Where you see people trying to let go of control and let magic happen through innovation and creativity. And hopefully, I think governments are looking at that as well.
It's also kind of the other problem is that it's also an ideological shift, yeah? Because if someone is a control freak, he wants to control everything, and that might not work out very well.
Can I just jump in on this? I mean, the existential, there's a big black swan that I'm tracking, which is whether or not big state, big government is winning or losing the battle. And the front lines for this right now are in Europe, with the Eurozone crisis, with the Scottish secession movement, with the Catalans thinking about seceding. And I'm watching this and I'm wondering which way is this going to go? Are the Scots going to leave the UK? If they do, small is beautiful is winning. If they don't, and it doesn't look like they're going to right now, then big is winning. If the Eurozone doesn't break up, then big is winning. If Texas doesn't decide they've had it with subsidizing, I don't know what state they subsidize, but they pay more in than they get out of the federal government, and if they continue to tolerate that, then big is winning. But if small starts to win, then I think that bodes well for decentralized currencies like Bitcoin. So that's something to maybe keep an eye on in terms of Bitcoin's prospects.
Yeah, I think it's not necessarily small and big that assumes some hierarchy. Mm-hmm. I think it's one context, like you're using only one currency, to multi-context. Suddenly you have always 10 different currencies. You're a member of one nation state, and suddenly you become a member of 5 nation states. So, and that, again, the same goes to the new paradigm shift in management. It's not about you having one boss, it's about you being the boss of your own and having reporting to basically everyone or no one.
I think that the ideas of Joseph Tainter, he wrote a lot about how empires grow and eventually collapse. I think he tends to combine those two, the idea of large political entities and then also hierarchy. I think he ought to be maybe a little bit more sharper and talk about how large bureaucracies eventually fail under their own weight because it's more and more expensive to keep this system of centralized control going. And I think that's what we're seeing in Europe today. It's tremendously costly. We have also in the US a proliferation of legislation. And at the same time, we see from the ground up a lot more resistance. We see people doing things more on their own terms. We see people refusing to cooperate anymore. And then even a little bit higher up, we see governments that are protesting, like Finland, and these governments that don't directly benefit so much anymore from the bureaucracy, from the European Union, for example. These are the forces that are going to pull apart the empire. It's always been like that, and I don't see any reason why it's going to be different today.
Is Bitcoin a currency or a commodity? What do you guys think?
Technology.
It's both. Why can't it be both? It's I guess it's a commodity, and then the subspecies of that is that it's a currency. There's commodities that are food, and there's
I agree.
Different ones.
I agree.
I would say that it's a liquid commodity, and I would, if I want to really be as precise as possible in the abstract way, I would avoid the word currency at all because it gets fuzzy.
Garrick, I have another question for you. So I'm very curious why Bitcoin has not been more interesting in the academic world. It's an amazing scientifically studyable system. It's trackable, it's observable. It is not in just one location, but it is around the entire world. I would imagine that an interested academic would be all over this, and yet we do not see that is hugely happening. So why is that?
We keep losing our great potential academics like Peter to private ventures because the private sector just pays a lot more than the academic sector. But they're starting to get more attention. Tyler Cowen, who I mentioned earlier, is writing a lot about Bitcoin. He hasn't published anything. There was a paper out of Stanford about how to make Bitcoin better. A paper, I think, from some Irish, I'm not sure if they were economists or what they were, but looking at whether Bitcoin's really anonymous. So there's getting, there's attention now being paid to it. But a lot of academics are very skeptical of Bitcoin. I don't know how much that's based on the blinders that the economists often have to, I think, new things that are outside their kind of worldview versus based on their really taking a look at it and scrutinizing it and saying, there might be something here to this, or the world can change. It doesn't always have to be the way it's always been before. But yeah, a lot of the academics are skeptical, and I want to keep coming back to this because I think it's really critical. I think the narrative, the Bitcoin narrative, is so important to whether Bitcoin's going to take off or not. And there's a narrative problem right now in the public eye with Bitcoin. I think that's just to really hammer on that. I think that's one of the big challenges to really growing Bitcoin beyond where it's at right now.
We're working with MIT Media Labs on some analysis of mostly social investing, what we do, but we've also seen some work on Bitcoin. I think one of the challenges there, it's computer sciences versus economists, which are very, very different departments, and it's not obvious who's taking control over this field. It's mathematical economics, and I think that's also one of the challenges of the academic community.
Definitely.
All right, I think we should open it up to questions, and this guy right here is very anxious.
Hi, John.
Gentlemen, thank you so much for this really interesting panel. It may be just as well the academics haven't paid much attention to Bitcoin yet. I'm inclined for us to just keep quiet about it until it gets so much attention and momentum that it can't be messed with. Garrick, to your point about who's winning or losing, Scotland on the one hand, the ECB on the other, hypothesis. One of the reasons that Canada has gotten through this recent downturn relatively unscathed is because their provinces can make a credible case for secession. Quebec, some of the westernmost provinces, and over the last couple of decades, not just since 2008. And as a result of that, that's had two effects. One is that the federal government in Canada has had to devolve more responsibility and down to the province level rather than to keep it centralized. And two, they've simply had to perform better because there's in effect been competition, the competition being one of their provinces going their own way without them. So I just wanted to highlight this as one of the, well, first of all, get your thoughts on it, and as a case study that supports the benefits of devolving responsibility to smaller groups.
Thank you. First, John, thanks also for suggesting that I come to this conference. You're the one who made me aware of this, by the way, back in INET in Hong Kong, so I wouldn't be here without you. But I think it's a really interesting point you raise. I mean, I'm not sure I would give all the credit to Canada, or even a majority of it to Canada, riding out the recent turbulence in the macroeconomy to what you describe. I mean, they have a pretty resilient banking system. There's an ethos in Canada as well. They also have a very different housing market structure. Yes, there's bubbles in Toronto and Vancouver, but I don't think it's quite only about that. How much credit should there be for that? I mean, that's interesting. I mean, in most countries, or a lot of countries, you know, people fear the state. You know, in France, the state fears the people. You know, I prefer the French model. Maybe the Canadians are somewhat similar to the French in terms of there's this respect from the state for the people's ability to rise up and do that. And, you know, I don't know. I don't really. Anyone else have any?
I think, again, you know, something big is as good as how strong, you know, its different units are. The more relaxed management and less rigid it is. So if, you know, if in Europe all the countries were, you know, operating very, very well, then Europe would be operating very well. And it does make sense that it is competitive between the ECB and the different states.
All right, next question. We'll try to keep the questions real quick so we can get
Sure, I'll blast through this. It only takes one guy to ruin a great party, and
Are you that guy?
guilty. It's one of these guys. Maybe it's me. We have a great thing going here with Bitcoin, and I think the potential is limitless, except there is a tremendous risk, and that is of nation-state attack. Right. So, you know, right now, even though, you know, the monetary base for Bitcoin is less than 1.5 billion USD, right, which is versus, you know, USD M1 of 2.6 trillion. So it's tiny relative to US dollar M1. If you had an authoritarian nation state, there's one in particular that I'm thinking of that happens to have a lot of technological capacity at its disposal. Again, I'm thinking of the same particular authoritative state. And they said, we don't like this because we have capital controls, and we don't like this thing that can allow people to subvert our capital controls. We're going to churn out a truckload of ASICs and launch a 51% attack, call it a day. And that could be done right now at a very low cost, and even if the network were running at 10x, 100x, or even 1,000x its current level, you could still do something like that. What is the thought on the part of the panelists in terms of how that will be resolved? Do we see a hard fork in the blockchain? Do we see a nation-state attack succeeding? Do we see a successor to Bitcoin that's not a hard fork but a new thing? What happens?
I think it's a domino effect. So first of all, the Bitcoin community is a huge community of, you know, financial hackers. So they will identify very fast such an attack probably. And the minute, you know, somebody sees, let's say, you know, even, you know, small country comes in and start doing mining on a institutional government level, other countries are going to look at it and say, hey, we're not going to let Israel or Ireland take control of all the mining of Bitcoin, and then suddenly you'll see more and more and more states. The same goes, by the way, to corporates. So it doesn't matter who pushes that domino, but miners can become, you know, United States and Google and Facebook and different nation states around the world. But once somebody starts that, it'll just make the mining, you know, and the hashing much more difficult, because nobody's going to let one person control that. So my opinion is, if that'll start, you know, Bitcoin's going to fly to the thousands very fast, because it'll just legitimize it. And do the actual complete opposite of what, you know, you thought they would try and do.
If I may, just two short comments. If this is what war would look like in the future, I'd sign up for that immediately. And second of all, this is why you want to own some Litecoins, for example.
Yeah. The real question is, why hasn't this happened already? Why isn't Kim Jong, you know, already doing this? North Korea would seem like a good candidate for. No,
They don't have any computers.
they make good helicopters there, apparently, though.
I just have one comment, basically. Let's imagine that this happens and it fails, like they don't succeed. That will be a huge kind of boost for yeah.
That's the domino effect.
Yeah. So the attacker needs to be sure that they can win.
And also,
merely because you have more money, it does not necessarily mean that you can win, because of the huge community. Apart from other things, the businesses are now being invested. So.
Think about like U.S. coming in and suddenly China coming in and suddenly Russia coming in. You know, that's new, it's a paradigm shift of
And then you have the Barbara Streisand effect. There was a picture of Barbara Streisand leaking on the internet. She wanted to prevent everyone from knowing it, and all of the world knew it. So, I mean, this is going to be the best PR campaign for, I think, for cryptocurrency in general, and there is the whole creative power of the market that's going to find solutions around it.
So not to be the guy that ruins the party, I'll cede the floor with one last thing. It's not the government of North Korea that I'm concerned about, it's the government of China, which has tremendous wafer capacity. If I were the government of China and I saw this as a subversive thing, I would bring on, right now the network's at 100 terahashes, I'd bring on 10,000 terahashes in a day, right? So it would be...
But how would Uncle Sam react?
Uncle Sam would react slowly, angrily, but slowly. But by then, the integrity of the system.
They might say that they need to register with the FinCEN or whatever.
Exactly.
So an important concept in Austrian economics is economic calculation, and it's the reason that capitalist economies can rationally allocate resources and socialist economies cannot. The very interesting thing with the Bitcoin economy is there are a lot of merchants which accept payment in Bitcoin, but almost no merchant is calculating in Bitcoin. And I can't see a path for widespread economic calculation with Bitcoin unless we have a deeply liquid exchange. And one thing that surprises me at this conference is there's not a sense of foreboding about what is happening with the exchanges. I asked Eric this before, and my question is actually to Peter now. Is it possible that we can get to a place where entrepreneurs, merchants are calculating profit and loss in Bitcoin terms without a deeply liquid exchange?
In principle, I agree with you that it wouldn't spontaneously emerge until there's an extremely high level of liquidity, which even if Bitcoin is evidently a success for everybody, there's no guarantee that it will be sufficiently liquid for this. However, there could be market segments that deal primarily in Bitcoin throughout the whole production chain. And for those, it might make sense.
Satoshi Dice.
Like one of the examples that comes in mind is the mining. Maybe they can buy the silicon raw materials with Bitcoin and then the production and everything and end up paying for electricity in Bitcoin as well. In those cases, that might make economic sense. But as a general unit of account, you're right. There's no guarantee, even if Bitcoin succeeds, that it will be used as a unit of account.
So why are we not more afraid about what's happening with
let me
gas?
jump in real quick. I think the issue of pricing things in Bitcoin is really irrelevant. We have these things called computers that are very fantastic at calculating exchange rates. And as long as there are some stable assets out there, whether it's gold or dollars or any other fiat currency, computers just calculate an exchange rate based on that other stable dollar. And it really doesn't matter if it says dollars, but you pay in Bitcoin, or if it says Bitcoin and it's based on the price of dollars. It's all very fluid, and computers handle these problems for us. I think maybe there's like a couple seconds left if you have something really quick.
Oh, I have something very quick. Who wants to buy my place in line?
What's the price?
Let's see a smooth, quick transaction. Place in line.
All right, you failed to find a clearing for your price of zero.
Well, that is telling.
Do you have a question? I like entrepreneurs.
So, yeah, in general, I'll keep it short, but I'd like to have a good answer by then. Every action evokes a reaction. And if Bitcoin, and we all believe that Bitcoin will be so successful, then it might well have a very strong reaction in disciplining central banks and authorities. And that would actually be the success of their systems. And I would like to hear your point of view on this.
I agree.
Yeah, I agree too. If that's the result of the Bitcoin experiment, is that all the central banks stop printing money, then we fucking won. I think we're out of time, though.
I don't think it's working like that. I think if it works on disciplining, they will not start printing money, but they will just do the opposite. If there's a currency so successful as Bitcoin, it will be a disciplining effect on them, and they will not start printing that. And that's more the idea that I think. I don't know if there's views on that.
I think they may change their narrative. The narrative of the critics of the central banks is that it's backed by nothing. And maybe in 5 years or 10 years from now, the central banks will start saying, hey, if you can't hold it, you don't own it. And they'll be trying to back their fiat currency by some commodities or some gold, and they'll be railing against Bitcoin because it's only virtual. I mean, I'm just saying, I think, yeah, and this is constraint. And also, in the very long run, institutions may live a long time, but they don't always remain as relevant as they were. Like, for example, the church. I mean, 100 years ago, everybody was fearing the church and the local, even the local priests and then the high priests. And I think today the church is still around, but it's a whole lot less relevant.
I think the main discipline here is digital and computer sciences is good. And my guess is 10 years from now, hopefully, central banks will just have a good register of where their money is, or what they don't have today. And I think that's a huge leap into a digital economy, just making sure everybody knows where the money is.
All right,
I'm a bit more cautious here with the central banks, because hypothetically, as long as there is a sufficient demand for the whatever currency they're issuing, they can still conduct monetary policy. They might have it more difficult to conduct it for the reasons of monetary policy, but they might reuse that for fiscal purposes. So it's a difficult question. The time is too short to fully answer that.
All right. Sorry, guys, we couldn't get your questions, but thank you all very much for joining us.